Hello and welcome to our Lean Thinking webinar on automation and business spending. My name is Nancy and I'll be your moderator and guide today. Before we dive in, we have a few housekeeping items to cover. First, if you have any questions, please use that questions feature in your GoToWebinar control panel to ask us any questions, or if you want to chat with us, and we'll be happy to follow up with you after our webinar today. You'll receive a link to rewatch our webinar today along with additional materials and in your email tomorrow, so be on the lookout for that. And upon exiting the webinar today, you'll be prompted to complete a very short survey. We'd love to get all your feedback and your thoughts about today's presentation and what topics you would like us to cover in the future. At this time, I'm going to invite Christine to introduce our speakers. Christine is an audit manager at Saltmarsh, and she's a member of our manufacturing team. So over to you, Christine.
Hello, everyone. Excited to introduce our guest speakers today. Please welcome Paige Gonzalez and Christy Hicks. They represent American Express Global Services Card Solutions for Businesses. They partner with manufacturing companies to help extend cash flow, streamline processes through more efficient payment tools while creating an impact to the bottom line. Now, I would like to kick this over to Christy to get us started.
Thank you, Christine. Paige and I are very excited to be joining you guys today. And, my role with American Express is to work with our existing clients and also new customers on our card products. So wanted to, just share with you guys today how we can look at the automation of business spending. And I'm going to let Paige introduce herself.
Hello, everyone. Yes, my name is Paige Gonzalez. I'm a director at American Express. I work with Christy in the Florida market. But first of all, please feel free to send any questions or comments through that chat feature, and we will respond to them after the seminar. As you can see from our agenda here, we will discuss the following topics. So we're first going to dig a little bit into manufacturing industry insights and trends. Then we'll focus on cash flow. Most of it will be on cash flow, different spend types in the AP departments. Talk a little bit about AR departments, and then dig into the inefficiency tax and using technology to streamline processes. And we'll close out today with a manufacturing case study about a client and the impact it had on this business when they implemented some technology. So we look forward to exploring these items with you today, and Christy is going to kick us off with manufacturing insights and trends.
All right. Thanks, Paige. So throughout Manufacturing Month, if you've been on any of these calls, the insights and trends you see here are consistent with what we've been discussing. So at American Express, we work with many manufacturing businesses and have heard similar stories throughout the past years on a few of the trends that we found. Challenges. There's rising raw material costs, hiring and retaining skilled employees and keeping employees safe are definitely, some of the biggest challenges that we see. Cash flow is really being impacted right now by uneven sales, receivables, inventory, and production. Many of the new manufacturing ideas and companies are having a difficult time getting funded as margins for error on new products are very small. In addition, many of the products are subject to seasonal demand. And on the technology side, technological innovation is helpful in so many ways, but it also exposes companies to cybersecurity and other risks. Investments in technology, robotics, big data, analytics, digital, the internet, and food manufacturing are some of the technology sides of manufacturing that we're going to look at today. So really, we're going to focus on two of the impacts in the manufacturing industry, cash flow and technology, and how we can positively impact both of those at the same time.
Great. So piggybacking on the trends and insights, let's dive deeper into cash flow. So that cash conversion cycle. Cash flow can put a lot of major restraints on any business. And there's two sides to every story. In the finance world, maybe we'll just talk about here the AR and the AP side of things. So every company wants to lower their AP turnover and increase their AR turnover. So at Amex, we're lucky to be a financial institution that owns vehicles on both sides of that. For instance, the card side, the merchant side, the paying side, or you could call it the accepting side. So, but today, first, we're going to dig into the AP side of the house. So taking a look at cash flow and what money is flowing out of a company, how is your AP spend broken down? What categories do you think your AP spend is broken down into? And how do you manage and account for the three types of spend on the AP side that we're going to go into today, which is that AP/invoice-backed spend, your T&E, your travel and entertainment spend, and the tail spend. So let's go first into that spend breakdown in manufacturing. Spending, we see it really broken down into 8 categories. The spend does vary significantly depending on the manufacturing sector. So are you electrical equipment? Is it metalworking, chemical, paint, textile, paper? So the main categories we see are profit, wages, we all know payroll, the purchases or the cost of goods, which is our biggest expense, marketing, depreciation, rent, utilities, and other costs. And that's also a big one there. Your IT, your overhead, insurance, maybe that's logistics, admin fees, office fees, legal fees. So as you can see from that breakdown, over 50% of this spend can cause a huge funding gap for companies, especially in those 2 categories of purchases, cost of goods, and other costs. However, what is great to know is that 50% can potentially be paid with methods that include extended terms and maybe even a rebate or incentive back to the business that can go to funding more purchases and more of the other costs. Now, don't we all want to make our AP department a revenue generator? So now let's look at where we can get the biggest bang for our buck with the 3 types of spend that are out there. Christy?
All right. So as Paige mentioned, manufacturing, along with most businesses, have 3 types of spend. So there's AP spend and invoice-backed spend, which is typically the bulk of manufacturing businesses spend. This will be any spend where they are issued an invoice, and it will include spend of all suppliers for raw materials and inventory, overhead expenses, and services needed to sell your product or just run day-to-day operations. The T&E spend is, really any travel-related spend, airfare, hotel, for employees, contractors, doing business operations, even fuel. This, of course, can be a large portion of expense depending on the type of business. And in manufacturing, this can relate to trade shows and association meetings, visiting plants. So the third type of spend we call tail spend. It's referred to as miscellaneous or maverick spend, and any type of spend that doesn't really follow that normal procurement or invoicing procedures. We're going to get into more detail for each spend profile in the slides ahead. However, sorry about that. These types of spends really can be paid using 3 main payment types. So check, it's typically the payment method that everyone is comfortable with. Fun fact, the first checks cropped up at the end of the 17th century. I didn't know this either. And printed versions came out about in 1762, and we're still using them today. So definitely the main payment method, but time and labor intensive payment method. And then the mail, it's unreliable and slow at this point. Not sure if you saw the beginning in October, they were talking about the mail slowing down with everything going on with the Postal Service. But Live checks put account numbers on them and are open to theft and fraud. And then you're not getting any type of float or incentive offered when you're using a check. So with ACH, definitely a more secure way to pay suppliers via bank. It's definitely the more preferred method of payment by many suppliers. But the reconciliation process really depends on the bank and who you're utilizing. But there also is no float or incentive offered to owners. And then we look at the credit and charge products. It can offer additional float and time, additional security for business since banking information isn't released. We can look at incentives on AP spend, and then payments can also be automated with additional reporting for insights and approval process. Okay, now Paige is going to talk about the 3 types of spend in detail.
So let's start with our invoice-backed spend. These 3 different types, it doesn't matter if you're looking at check, ACH, or card, they can be used for everything, for all different types of spend. Though, as we mentioned, our biggest dollar amounts the bulk of manufacturing spend is in this category. So quick question, are you leveraging your AP spend right now to earn incentives and manage your cash flow? So Christy, take it from here and go a little bit into the reality of supplier payments.
So does this image resonate with you? It's definitely a very applicable, I think, with reality versus what we'd like the AP process to look like. So, possibility of never receiving an invoice in the mail, data gets input incorrectly, disputed invoices that delay the entire process. Maybe your PO didn't match the invoice. Then how do you handle cash flow challenges that delay payments to suppliers? And what impact does that have on your relationship? And I'm sure you could list a dozen more. In theory, AP is a very linear process from receiving the invoices, inputting the data, and then getting the payment to the supplier to reconcile. But in reality, we know that many things can go wrong during the process. So the manual AP does not paint that pretty of a picture here. The reality is the impacts of these inefficiencies and the manual process can mean limited transparency, inefficiencies in time, very little electronic payments, missed opportunities with getting cash into the business quicker, and then also, just the limited reach. In addition to the AP spend, the manufacturing industry has had a large amount of tail spend. And Paige is going to talk about that more.
So the same is not so pretty picture, the same not so pretty picture aligns with the next type of spend, tail spend. So again, how do you manage and account for this spend? It tends to be the hardest to manage and track within a business. And it's really defined as, we call it maverick spend. It's purchases that may be too small, maybe a low dollar amount, to be managed by that procurement process, or too infrequent, like ad hoc purchases, to actually effectively process them in a catalog system. The issue is if you leave these unmanaged, they can have a profound impact on your planned budgets for the year. And as we saw earlier, this spend in manufacturing could even get up to about 30% of total spend. So again, common examples of that would be IT, office supplies, maintenance, marketing, infrequent travel or purchases, one-off purchases. So we're not going to go too much into this. We're going to talk a little bit later about how you can automate this with some new great tools that are out there. But next, let's just dig real quickly into that third and last type of spend, which is the travel and entertainment spend.
So what does your travel and entertainment spend process look like? Employee cards. Do your employees go to trade shows and association meetings or travel offsite to, to plants. So even though the spend might not be huge in manufacturing, it can still create a headache. How are you handling the expense reports and receipts? So does it look like a box of receipts? Are they taking pictures on their phone? Is technology, something that the employees maybe are challenged with? Excel spreadsheets, can be emailed back and forth, and then constant reminders to send receipts, etc. Does this sound familiar? So when we look at, employee expenses, there's, really two options they have to pay, whether it be their personal cards or corporate cards, right, or a business card platform. So some of the things that you find with using the employee's personal cards is, is the creditworthiness of the employee and available credit lines. Would it hinder their spend? Do they even want to be, use their own card? Very little visibility and control. You typically don't have insight into the statements or integration. Does it impact their debt to income ratio? It could impact, the employee's ability to borrow. And then the one good thing is that employees can be incentivized, right, to submit expenses since it is on a personal account, maybe not so much chasing. But generally, we find employees are promptly submitting receipts for reimbursement and so forth. And then there's little or no liability on the business when it's on their personal card. So then we look at corporate and business cards. So, really options between payment responsibility, meaning is the company paying it or is the individual? And with a corporate card, you can actually choose who pays the bill, the company or the employee. There's options between liability at different program levels and card levels. So whether it be corporate or joint liability, and then you can also diversify the liability between business and the employee. Corporate cards can offer an incentive to the business, and this allows you to leverage T&E spend for an incentive back to the business or offsetting costs for employee recognition with employee gift cards and so forth. So, but definitely greater visibility and control with reporting and limits. And then there's options to control spending on employee cards through a corporate card because of the visibility into spending. A little bit later, we're going to address options to automate the spend. Right now, we're going to take a quick moment to touch upon cash flow on the AR side.
So this is a hot topic right now going on in most businesses, but especially manufacturing. So like Christy said, not too much detail here, but we mentioned earlier, I think it was in slide 4, the goal of that high AR turnover. So what can you do to receive your payments faster? Get your customers and clients to pay you faster. Put that cash back quicker onto your balance sheet. And take that money and reinvest it if you want to more effectively and efficiently. So one thing we've seen a trend recently is that a lot of companies are transitioning away from accepting checks. And they're streamlining even that AR side through accepting cards. So I'm sure you're first thinking, what? Pay fees, right? Merchant fees. Yes, there is a fee, so you can write it off, but yes, there's a fee. But what would accelerating payment do to you? What is that worth? So instead of receiving payments in net 30, which we all know sometimes becomes net 35, 40, 50, maybe even 60 days, what if you could receive payment in net 5 or 10 or 15? It all depends on the company. Would that influx of payments to you mean anything to your balance sheet and your cash flow? So some of our clients say it's priceless, but it's just something to think about here today to look at. So moving on, next we're going to dig into the last section of our seminar today, which is making all of these AP spend types a little bit more streamlined, our processes, and trying to go into the future with how we're going to be handling business in the going forward. All right, so let's start with this, what we call an inefficiency tax. It's a report that was done. We're going to start there, and then we're going to talk about how we can connect that with technology enhancements. So, Christy, tell us about that report.
So, first of all, so this is something that we'll share after the webinar today. So, but definitely being able to relate on aspects of business that everyone has in common, right? Is inefficiencies, and how can we look at that in a more streamlined way? So let's discuss some of the questions that are listed. So, has your company ever lost a check or invoice? 50% of companies polled said yes. So do you have piles of papers, complaints about speed of invoice approval, issues managing cash flow? Absolutely. And then there's many mid-sized firms that believe they waste 70 hours a month due to inefficiencies in their company's payment processes. So really looking at the potential profits that are lost to outdated systems. And I know Andrew and then also Scott had talked about, a lot of the cash flow side of things in our previous webinars this month. So at American Express, though, our research explores these questions and possible answers in this report. It lays out the inefficiency tax that can cost average mid-sized firms in both time and money, and how automated payments can help firms regain competitive advantage. Hey.
So how can we avoid, thank you, Christy, how can we avoid being so inefficient? So on this slide, we have the accounts payable process at a high level. And as we begin the discussions around automating this process, we wanted to outline the different stages of the AP cycle that a business could automate. So there's applications, there are softwares, there's apps out there on the market that can either automate a single step in this process or the entire process from procure to pay. So there's things that can be done for the invoice capture, for the automated payments, for the reconciliation on the back end. So for our discussion today, we're mostly going to focus on automating kind of near the last step of that, which is the payments. So Christy?
So maybe people are put off by the words automation and technology. I know it definitely can be a term that we try to avoid because some people believe it's going to be a huge overhaul with technology or more work, or maybe even replacing a job. So that is definitely not the goal here, I promise. Really is looking at streamlining and making your company more efficient and effective is our reality and what we're trying to accomplish. So what are the benefits of streamlining and using payment tools in your process, no matter what the payment type? So it could, does it save you time? So when polled, a lot of the firms said that it could save around 65 hours a month with more efficient automated AP systems. Would you agree? So efficiency. So 92% of businesses say that operational efficiency is a top priority. We hear it all the time, with talking to clients. And then really looking at, better access to data so that if, 85% of businesses say that improving access to actionable real-time data would drive better business outcomes and is a top priority for them. And
I think that real time, Christy, that real time data you don't see, right? You don't really know what's out of the business and what's coming in real time. So I think that's a big added benefit there. All right. So looking at automating the AP process, let's walk through the steps in the process from selecting your suppliers all the way to reconciliation. So this is a general overview of how AP runs when the payments and reconciliation are automated. So we start off with supplier review. So whatever partner you would go with to automate, they would request a raw supplier file. And the reason for that is we need to identify which suppliers want to be paid when and how they want to be paid with which method. Okay, once that's done, we go into implementation, and that process can range depending on a web-based portal, like an online bill pay, to a fully integrated system solution that it can be, installed. It could be hosted externally. That full service solution can really handle all types of payments, checks, ACH, wires, card. So then your AP process, the one in the middle there, is executed. That doesn't change, and that's what I always want to make sure we reiterate, that a secure email, if it's a card, is automatically sent with a virtual card to a supplier. Checks are sent out, ACHs, wires can be sent out. It would be like, I don't know if any of you do positive pay with the bank, but the idea of that file being executed on the back end on your behalf. Then the suppliers receive their payment however they like, and they get a remittance information with that. It's sent from your partner, whoever you're working with, to your suppliers, and payments are processed. And then on the back end is the reconciliation. So recon can range from a flat file data that can be imported to a full integration into your ERP or your accounting software. I just mentioned right there a little bit about virtual cards and tokenization, we call it. This is like a hot topic out there. I feel like, majority of our clients now are getting away from the plastic card numbers and using them to these virtual cards. So we all know that security is a top priority, especially in manufacturing. We talked about that being one of the trends right now. So when using cards, for instance, we want to ensure your card account number is in the automation tool, but it's not actually being shared with anyone. So here's a brief description of how that works and basically the flexibility it can offer a client. There are such, virtual cards that we call exact match tokens. These can only be charged once by the merchant for the exact amount specified. So this is, if a supplier tried to charge you more or less, it would be declined. And then if they tried to do a second charge on that card for whatever reason, it would be declined. Good for certain scenarios. The up to tokens or virtual cards can be either single use or multi-authorization. So a single use, that card you could send somebody can be charged once by your merchant or your supplier for any amount up to amount specified. Or the multi-authorization, which we do see a lot, which is that virtual card that can be charged a number of times. You might have a cap on it up to a certain amount specified. And this really is a necessary feature to use virtual cards for anybody that requires card on file. Okay, so it's another security as well. But if you have card on file, you want that multi-authorization token. All right, now we're going to go into streamlining tail spend. So, Christy?
So definitely a fun spend to automate, and there's a lot of new technology options that have come out that can create visibility and controls over tail spend. So, we have the ability to, take POs and GL codes required for ad hoc purchases. To be able to connect and integrate with the system for an approval process. And there's also a lot of tools that can accommodate on-demand virtual cards and can be sent to a mobile device to, modernize existing purchasing card programs in place today. Also being able to connect invoices, right, to those virtual cards is also another option. So our last type of spend is T&E, and it's so important to be more efficient with employee spend and options there.
We even just quickly back to Tailspin, Christy. We even have a client that has 400 of these virtual cards. They shoot them out from a system, and they go onto the phones of the employees when they need one-off charges in the field. So it really is interesting to dive into that and see where we're going in the future. All right, T&E. Another consideration for businesses with T&E spend is the process that they're going to enforce with their employees. So with all the technology and applications today, more and more in our businesses are trying to automate that so they get away from Excel spreadsheets. What are some of the benefits of this? Number one, and you'll see this a little bit in our case study, saves time for company and employees, getting away from paper, lost receipts, eliminates the manual errors. The third one is big, that reporting, ability to do job costing or departmental coding automatically up front versus manually after the fact having to code everything in your system. These tools will increase controls, visibility into spend, and really let you hold to those T&E policies and make sure everybody's being compliant. And then the last is employee satisfaction and efficiencies. So being able to take those pictures, pre-populate an expense report. Christy and I worked at a company in the past where we literally would tape receipts and fax them in for our expense reports. And it's so great now to have a solution that auto-populates all of that, and we just code it and submit our expense report monthly. Definitely saves a lot of time. All right, let's talk about, most companies these days are not only automating car spend, but as I mentioned before, maybe that full file, that ACH check wires. But now let's just hone in on automating with a card partner. If you're going to choose a card to go with, why would you want to choose virtual or plastic cards to actually even put in a tool to begin with? So number one, of course, there's incentives. Earn rewards. Could be cash or points on supplier payments. Number two, boost that cash flow flexibility. Many of our clients find value in extending their DPO to improve that cash flow. And then the last there is that security, that unique virtual account numbers are sent to your vendors via email and not your card numbers. Now, in regards to that first section there on the slide, the incentives, let's talk about that. So this can vary significantly between providers and programs. So if there is a cash incentive, usually it's a basis point calculation paid on a total spend commitment. Again, that could be given out quarterly, monthly, annually. You got to ask questions to figure that out. It may even be paid on a tiered structure for total spend, and it might depend on the size of the transaction, what you get as your rebate. You might be contractually bound to spend commitment, and then just always find out, is there a clawback if you don't hit it, etc. And then in terms of points, they're accumulated on a variable ratio monthly. There might be accelerators on certain categories of spend, and they also might have max thresholds. The redemption value on the back end really does vary by provider and how you redeem those, whether it's travel, gift cards, etc. And that really are the two different types of incentive structures that we see out in the field. So definitely, if you're looking into a card program, just make sure you're asking so you understand really what you're getting into and what your return is. Christy, want to go on about considerations for card programs?
Yes. So when we're looking at card programs, there's really four factors that people look at considering. So first being the liability. So it's with American Express, it's an unsecured line, and then underwritten with company financials, or the option of shared liability and securing by an individual or personal guarantee. The second is incentives, and really cash, or Paige was just talking about, how it can work, but, cash, points or membership rewards, is there a combination of it? And then also looking at, a contract being in place so that we can offer additional incentives for that spend. The spend piece of it, supplier versus travel and entertainment, and then looking at if there's a supplier enablement to help onboard getting that spend on it. A lot of my clients, that we say that we'll do the dirty work, so to speak, right, for the AP side, in looking at being able to add suppliers to a program. And then the process side is the last. So, and how is it going to impact, the process, payments, and reconciliation for your department? So when we look at some of the considerations for AP automation software, some of the things to keep in mind and good questions to have would be, what type of virtual card functionality is offered? Are there aspects of the procurement process that the software will satisfy? And then really, what are you trying to solve for? The level of card acceptance amongst suppliers, and how do they require payment? Is it via email? Is it point of sale? Is it, taking a card number over the phone? What's the volume of invoices that you're processing every month? And then really, from an IT support, what's going to be necessary to implement with them? Do you have someone in IT that, that can help? And then on the implementation side, are they, being able to speak their language? We're now going to look at a case study. Paige?
Yes, thank you. So here's a client scenario that I wanted to share, and it's Brown Manufacturing Company, Inc. Okay, so this is a manufacturer in textile printing equipment, and what were their needs or challenges? Okay, so they were looking specifically to reduce time and money spent on manually making all of their payments. They had 50 plus more, vendors that they were paying. So that was the pain point when they came to us, and we talked about one of our solutions that we have. They implemented a payment and reconciliation tool, and the business impact was really, number one, at the end of it, they thought they had definitely lightened their workload. There were less checks, less envelope stuffing. They were really saving not only time, but resources in the office and their costs at the same time. Brown Manufacturing said the tool was simple, and that it wasn't a lot of training that was even needed. And then the great thing about this one was it integrated with their ERP, with their accounting system. So this is one example of how integrating a payment tool platform positively impacted the business. So I think the theme here and everything Christy and I have been talking about today is less grind, more growth. In the business environment where we're all right now, and that includes our owners and employees, we're all being pulled in so many different directions, more than ever. And automation is a way to streamline those processes so all of the companies and businesses out there can get back to, again, those revenue generating activities. So this concludes our seminar today. We want to thank you, Saltmarsh, Cleveland, and Gunn, for having us, and have a great day. Thank you so much.
Thank you, ladies, for joining us today. You had a lot of insightful information on business automated spending. And just a reminder to our audience that this webinar was recorded, so you'll receive a copy of it along with a copy of the slide deck in your email tomorrow, so be on the lookout for that. If you missed any of our presentations this month in celebration of Manufacturing Month, we invite you to visit our resources page to access all of them on demand. We'd love for you to check them out. They're all very good information. And upon exiting this webinar today, you'll be prompted to complete a very short survey. Just leave us a few comments. We'd love to get your feedback. And with that, Christy, do you have anything else to say?
Just want to thank you, ladies, Paige and Christina, for being our guest speakers today. And we want to thank all of our viewers. Hopefully you learned something new today. I personally learned a lot about lowering your AP turnover, lowering your AR turnover, automation, some virtual cards, and I really love that case study. So thank you so much for being with us today, Paige and Christy. Appreciate your time.
Thank you, Christine, for inviting us. We appreciate it.